It is time now to take a look at the week ahead in finance, and joining us as per usual is our late news money expert Scott Phillips, Chief Investment Officer from Motley. Scott, good evening. Russia and Ukraine giving investors some serious concerns and having a big impact on global markets.
Pete, good evening. It certainly is, and this is a real X factor for markets. We know, of course, the tensions are there. We simply don't know what comes next, how long it takes and how bad it is. Now, of course, general geopolitical instability is bad, but in this case, specifically, we're thinking about gas pipelines from Russia to the rest of the world. Now, of course, this is the finance implication. The human implications, of course, are much more important. But when it comes to finance, not only the disruption generally, but the cost of oil. And we know, of course, that is literally the grease that makes the world go round economically. And the cost of that, as it changes, will impact the markets in particular.
So let's hope diplomacy can work this out and not war. What we do know is that US inflation is continuing to rise. What's the likelihood the same thing will happen here, Scott?
Yeah, you've really hit on the big two macro issues this week, Peter, because these are the big two, of course. The inflation question is an open one. The RBA for now saying, look, so far so good. We know inflation's high. We expect it to be transitory. Of course, that word is important because that's exactly what the US Fed thought a couple of months ago. And now they're getting 7.5% annualized inflation, which are numbers that we haven't seen for decades, literally decades and decades. Now, if it does continue to rise here in Australia, the RBA will be forced to move more quickly and probably longer and further than it would otherwise have chosen to. And of course, that puts the whole economic recovery at question. Not only that, it also, of course, makes money more expensive. Both those things have markets really concerned, and we'll see more jitters this week, I'm sure.
OK, we have some pretty important numbers coming out this week, the unemployment figures. Expectations around that?
Yeah, these are the big ones in terms of local economic data. It's a real concern because in the past, we've talked about over the past 2 or 3 weeks, historical numbers, but they've been December numbers. And most of those have been, of course, before or during the Omicron wave. Now, we know these are the January numbers. That will still be impacted by Omicron. The moment the expectations are for roughly the same unemployment number, about 4.2%, as we got in December. Any meaningful deviation for that is either great news or news for a reason for concern. The real challenge, of course, is how many jobs were lost and how long will it take to recover coming out of this Omicron wave.
And what are you looking at tomorrow? How are the markets shaping up?
Wish I had better news for you, Pete. I'd like to finish on a high, but we can't today. The US market fell 1.9% on Friday, our time. At the moment, the futures look for a decline, so about 1.1%. So fingers crossed it doesn't get worse than that, but it's going to be a day in the red, unfortunately.
So the Ukraine situation, inflation in the US, and now not a great start tomorrow. Hasn't been a platinum finance report tonight.
It hasn't, mate. I'm sorry. I couldn't do you many favours, but I'll do my level best next week.
See you next week. Thank you, Scott.
Thanks, Peter.